Welcome back, everybody, for another deep dive. And today we're diving into the world of Warren Buffett.
Oh, always a fun topic.
Yeah, it really is. Specifically, we're looking at three stocks from his portfolio that some analysts are predicting could really take off in 2025.
Okay, interesting.
Yeah, and our source for this is an article from the Motley Fool.
All right.
And I think you'll find some of these predictions pretty interesting. Now, I'm sure you already know that Buffett's company, Berkshire Hathaway, has had some pretty incredible gains over the years.
Well, yeah.
I mean, really impressive. But did you know that their Class A shares are actually up over 5,681,000% since he took over?
Wow, that's a lot bigger than the S&P 500.
Just a little bit. Yeah, it really puts things into perspective. So let's dive into that first stock. We wanted to talk about Sirius XM Holdings.
Okay.
Now, at first glance, it might just seem like satellite radio, right?
Right.
But what's really gotten analysts excited is that Sirius XM is actually a legal monopoly.
Oh, wow.
In that space, yeah.
So that gives them a lot of power then.
It really does.
As far as like pricing and things like that.
Exactly.
Most radio companies, rely so heavily on advertising.
Right.
And, that can be so up and down. But Sirius XM, they get most of their revenue from subscriptions.
Right.
So that makes their cash flow much more predictable.
Much more stable.
Yeah.
And that stability is really appealing to a lot of investors. And then on top of that, you've got their price to earnings ratio, which is currently pretty low.
Yeah. That's another thing that makes them attractive, especially for value investors.
Exactly.
The PE ratio, it compares the company's stock price to its earnings per share.
Right.
So when you see a low PE ratio, it can sometimes be a sign that a stock is undervalued.
Interesting.
Which means that it could have room to grow.
Potentially.
Now, of course, it's not a perfect measure.
Right.
But it's definitely something that people like Warren Buffett pay attention to.
For sure. Okay, so moving on to our next stock, we've got Occidental Petroleum.
Okay.
Which is an oil and gas company. Now, this one is interesting because Buffett has been putting a lot of money into Occidental, even though they're carrying a lot of debt.
Oh, really? So that's kind of unusual for him then.
Yeah, it seems a little bit out of character for him.
Yeah.
Especially, being such a renowned value investor.
Right.
So it makes you wonder, what he sees in them.
Well, one of the things that analysts have pointed out is that Occidental's performance is very tied to oil prices.
Oh, sure.
And we all know how volatile those can be.
Yeah, for sure.
So if oil prices were to drop, Occidental could be hit harder than some of its competitors.
Right, because they've got so much debt.
Exactly.
They're more vulnerable.
So why would Buffett be comfortable with that risk?
Well, analysts point to a few potential things.
Okay.
First, there's a whole situation with Russia and Ukraine.
Right.
That conflict has put a lot of pressure on global energy markets.
It has.
And some experts believe that oil prices could rise because of it.
I see.
And then, of course, there's the political landscape here in the U.S.
With Trump's recent victory and all his talk about tariffs,
Right.
It just adds another layer of complexity.
Definitely.
I mean, those tariffs could really have an impact on oil prices.
Yeah.
Potentially pushing them even higher.
So it sounds like Buffett might be betting on that.
Yeah, it seems like even though Occidental's debt is a concern,
Right.
it looks like he thinks that the potential rewards from rising oil prices might outweigh that risk.
So we'll have to wait and see how that plays out.
Absolutely. It'll be interesting to follow.
Okay, so let's move on to the third stock that we wanted to talk about, Apple.
Ah, Apple.
It's no secret that Apple's a giant in the tech world,
Mm-hmm.
and
Absolutely.
it's the largest holding in Berkshire Hathaway's portfolio.
Makes sense.
And analysts seem to be particularly excited about Apple's push into artificial intelligence.
AI.
Right.
Yeah. It's not just about, adding AI features to existing products.
Right.
Apple is really strategically integrating AI across its whole ecosystem.
So it's a much bigger picture kind of thing.
Yeah, exactly. From software updates to, brand new hardware.
I see.
It could give them a significant advantage in the AI world.
Yeah, because it seems like it's changing so rapidly.
Oh, absolutely.
And this AI push is actually part of a bigger shift that we're seeing from Apple.
Okay.
They're really moving more and more towards becoming a services provider.
Interesting.
Which is really interesting when you think about it because it creates a more recurring revenue stream for them.
Oh, yeah, absolutely. Think about things like Apple Music, iCloud, Apple Pay.
Right.
These are all subscription-based services.
Yeah.
And that means consistent revenue for Apple.
Makes them a little less reliant on just product sales.
Exactly. And that's a key factor that analysts think is going to fuel Apple's growth. in the next few years.
And then on top of that, they've got this massive capital return program.
Oh, right.
Since 2013, they've bought back over $725 billion worth of their own stock.
Wow, that's incredible. I mean, when a company buys back its own shares, it reduces the number of shares that are out there.
Right.
And that can actually increase earnings per share.
Interesting.
And that makes the stock more attractive to investors.
Right.
Could even boost the price.
So you've got all this positive momentum with Apple, but then here's the thing.
Okay.
Buffett recently sold a big chunk of his Apple shares.
Oh, really? That's interesting.
So it makes you wonder what's going on there.
It does make you think, huh? I mean, could he be concerned about Apple's valuation?
Maybe. I mean, even with his long-term investment outlook.
Right.
Maybe he's thinking it's gotten a little overvalued and he wants to cash in some of those profits.
Maybe. Or maybe he sees some risks on the horizon.
Like what?
Well, increased competition from other tech companies.
That's always a possibility.
Or, maybe a shift in consumer preferences.
Yeah, who knows what the future holds.
Exactly. It's hard to say for sure, but it is a little strange considering how much he's praised Apple in the past.
Yeah, he's a big fan.
But, it reminds us that even the best investors don't always get it right.
They're not perfect.
Nope. And they're not afraid to change their strategies.
Adapt as needed.
Exactly.
So as we're wrapping up this deep dive into these stocks that Warren Buffett's got his eye on,
yeah,
I want to leave you with something to think about.
Okay.
We've talked about his moves with Occidental and with Apple.
Right.
But it's those decisions that are really fascinating to me.
Yeah.
Because what do they tell us about how he's viewing the future? I mean, does he think that traditional energy sources like oil and gas are going to make a comeback?
Could be.
Or is he maybe anticipating some kind of shift in the tech world? Where something comes along to challenge Apple?
Yeah, it really makes you wonder.
It does. I mean, he could be looking at the long-term demand for oil.
Possibly, especially with all the geopolitical stuff going on.
Right, all those uncertainties.
Yeah.
And on the flip side, maybe he sees some other tech companies, coming up that could really give Apple a run for its money.
Yeah, it's like trying to solve a puzzle.
It really is.
Buffett makes a move and it just leads to more questions.
Exactly. And that's what makes investing so interesting, right?
Oh, absolutely.
It's this constant learning process.
Always adapting.
Trying to figure out what the market's telling us.
And sometimes you get the best insights by just watching what the really successful people are doing.
Right. Exactly. So as you're thinking about your own investments, think about what Buffett's moves might be hinting at.
What's he seeing that we're not?
Exactly. Do your research. Look at things from different angles.
Don't be afraid to challenge your own ideas.
Right. Because who knows? Maybe you'll find something that even Buffett hasn't spotted yet.
You might uncover the next big thing.
Exactly. The world of investing is full of surprises.
That's for sure.
So stay curious, stay informed, and most importantly, stay invested.
Couldn't have said it better myself.
Thanks for joining us for this deep dive into Warren Buffett's world.
It's been fun.
And until next time, happy investing, everybody.